Hola mi gente and welcome back to the channel. This is Sean from We Are Investing. In this channel we talk everything investing and personal finance. On today's video we are going to go over some swing trade strategies. This video is going to give you an idea of what swing trading is and how you can execute swing trading to make money in the stock market. Now, swing trading is one of my favorite ways to trade in the stock market. I like it because it's not so much pressure on you. It's unlike day trading where you need to be taking a look at the charts every single minute, and that can be very stressful and it could be a waste of your time, in my honest opinion. So I like this laid back approach with swing trading, and I do think that with swing trading you can make serious money. Now real quick, before we proceed any further into this video, please consider hitting that subscribe button, ringing that bell, and smashing that like button. When you hit that like button, it helps with the YouTube algorithm and I really do appreciate it. The more likes, the more people are going to see this video and the more this channel is going to grow, and the more we are going to be able to grow our community. By community, I mean we have a community of investors where you can ask questions in the Discord, which you get access to if you join the Patreon. A link is provided down below. All right, let's get right into it, mi gente. What is swing trading? Well, swing trading is a trade in the stock market that has a timeline of a couple days up to a couple of months. You are basically playing the swings in a stock. A stock's going to go up and down, up and down, up and down many times. And you're trying to time it so that you can ride it up, collect money, or if you're shorting a stock, you can also make money on the downside as well. Now, there are a few things that you need to know when swing trading. There are some additional risks. Because you are going to be holding a swing trade overnight, you are exposed to the volatility in extended hours. You are also exposed to any news or any kind of events that can happen over the weekend. And depending on how long you are going to be holding a stock, you could be holding a swing trade through earnings. So then you are exposed to the earnings report and how the company has performed. And you're also exposed to any news that could happen, any press releases that the company could drop in the time span that you're holding the stock. Now, one of the most important things when it comes to trading in the stock market, and this is also relevant to day trading, is that you need to know where you're getting out before you get into a trade, because it's all about identifying your risk to reward ratio. It's all about playing the odds, and it's all about knowing what your risks are and what your potential rewards are, and putting yourself into situations where you can make money. Now, with that being said, now that we know what swing trading is in a nutshell, let's talk about some swing trading strategies. Well, there are multiple setups that are ideal for a swing trade, and we're going to go over a couple of them in this video today. But the first one is stuck in a box. Yes, help the stock, it is stuck in a box. Basically, this just means that it's consolidating, it's trading within a range that is well defined. If you take a look at this photo here, you can see that this stock has been trading up and down in a well-defined range that is horizontal, meaning that the resistance is straight across and the support is straight across. There is no trend line with this consolidation. And in a swing trade, you could play this multiple ways. You would buy into the support and sell towards the resistance. You're not going to hold through the resistance on a swing trade because your goal here is to play the swings. And based off of the trend, it's going to sell around the resistance. So a good swing trader would sell just slightly before the resistance, lock in their gains, and then play the trade again if it falls. They could short the stock then if it falls, but that's a little bit more for advanced traders, and I do not recommend shorting a stock as a beginner. The next setup is moving on up like the Jeffersons. If you ever watched the Jeffersons, the theme song, this is what this trade is all about. It's about a stock that is moving on up. This kind of channel, upward trend, is well defined. As you can see by this picture right here, the stock is setting higher highs and higher lows, but it's following a trend line. That might be a 50-day moving average. It might be the 200-day EMA. You have to look at all of the moving averages to see if a stock respects a certain moving average. And you can also draw a trend line, and that's going to be where the stock is going to bounce. Now, the trade in this setup would be to buy right after it bounces off of the bottom trend line and sell when it approaches the top trend line, because the stock is trading in a well-defined channel that is moving on up. This is a good setup for a swing trade because it's predictable, and you also have momentum on your side as well, so the stock can continue to move higher higher and higher. Now, the next trading strategies are all going to be on technical breakouts. So you're going to be playing the charts, but unlike day trading, you're not going to be looking at the 1 minute charts. You're going to be looking at a bigger picture, more macro trends, and those trends can still break out based off a technical analysis. Now, this is not trying to get too complicated as the picture you see on the screen here, because a lot of people will do technical analysis. They'll draw a million lines on the charts and you cannot understand what is going on. But some of the more simple breakouts that are easy to identify, the first one being a cup and handle, and we are going to go over examples of a couple of these breakouts in Thinkorswim so that you can see in the charts for yourself how sometimes these breakouts can be very lucrative. A cup and handle formation is basically a technical formation where you form a cup, you have two peaks, you are going to drop off of the second peak, you're going to hold off of the support, and then you're going to break out to the upside after the handle is formed. Another one would be an ascending triangle. Basically, in this situation, sellers are staying at the same point. Your resistance is flat across the top, but buyers are coming in closer and closer to that resistance line, creating that ascending triangle. There's going to be a point where the buyers meet the sellers, and because the buyers have been getting stronger and stronger over time, usually they are going to overcome that battle and the stock is going to break out to the upside. Another breakout would be a bullish pennant, which usually occurs after the stock has already broken out. And what happens is after that initial breakout, you're going to have some consolidation, but the buyers should be getting stronger and stronger and they should collide with the sellers. And after that collision, there is usually a breakout to the upside. But in the ascending triangle and the bullish pennant, the breakouts are not guaranteed. Just because that technical is formed, it doesn't mean that the buyers are going to win. The biggest thing that you need to take away from all of this in these technical analysis with the ascending triangle and the bullish pennant is that when the buyers and sellers collide, that is going to be a very volatile moment for that stock. And if it breaks out to the upside, that's when you get in. But you need to wait for confirmation, because sometimes it's going to break down and the stock is going to fall. So basically, there are a couple formations that you need to keep an eye on when you are investing in the stock market for swing trades. The first one is a consolidation range, a stuck in the box, where you would play off of that support line and sell closer to the resistance. Another one is moving on up. This one is an upward channel, a well-defined channel where you can identify the support and the resistance moving on up. But unlike the stuck in a box, this is going to set higher highs and higher lows. And then you can also play technical breakouts off of cup and handles formation, off of ascending triangles, off of bullish pennants, and some other technical analysis formations as well, like an inverted head and shoulders. There are many out there. I am just listing a few on this video. So before we get into some examples and we head on over to Thinkorswim, I want to give you some tips when it comes to swing trading. The first one, as a beginner, play the upside. Do not try to play the downside via shorting the stock. Just buy shares, or sometimes you can swing trade options as well if you want some more exposure and you want some more leverage on your money. And don't just go buying dips. You gotta research why a stock has fallen, because sometimes a story can change and a stock can drop a lot, and if you don't know why it's dropping, then you do not want to get into a stock. You just want to make sure that it's not dropping for a bad reason and it's solely dropping because of the price of the share. Another thing that's good to do with swing trades, depending on how long you want to take your swing trade, is you should do valuation on the fundamentals of the company, and you should see that the company is not overvalued or overextended in the valuation, because that's going to hurt your chances. Now, personally, a tip that I like to go by, because these stocks can be extremely risky, and if you're holding a stock overnight, this can absolutely destroy your portfolio. Stay away from stocks that are involved in clinical trials, because a clinical trial can make or break a stock. They are extremely risky, and if you get news that they don't have good numbers from the clinical trials or it was not approved, then that stock is going to drop massively and you're going to lose a big chunk of your position. And if possible, the best thing is stick with companies that you trust, stick with companies that you know, stick with companies that you are are consumers of, because this is going to help give you a better understanding of the company, give you a better understanding of the valuation, and it's just going to decrease your risk. And then finally, there will always be another trade. You don't have to get into a million trades. Quality is better than quantity in the stock market, and it's okay to pass up on a trade. Be very selective in the companies that you invest in, and be very selective in the companies that you trade, because a bad trade can ruin your day, and you want to pick good trades. So if you don't like what's going on, just wait another day to a stock that you do like is in a good position, and don't overpay for your stock either. So quality is way better than quantity in the stock market. All right, so let's go over some examples, and the first one we are going to pull up is consolidation, a stuck in the box swing trade off of Amazon stock. We all know Amazon stock. We all know that this is a tremendous company, and there have been opportunities to make good money in Amazon stock via shares or call options depending on what you were doing. As you can see here, over the last year, this is the 1 year 1 day chart for Amazon. You can see that it's been consolidating. It's stuck in a box. We have a resistance here at around $3,500. We have a support here at around $2,900. Now, if you were able to buy in Amazon stock at the support, that would be around a 20% gain over 21 days. And again, it happened a 22% gain over 55 days. Now, these are swing trades that would have taken a couple of months, maybe even a month if you got in the first time, but 20-something% over a couple of months are really good gains. And with this kind of stock, you know that your risk is limited, because Amazon is not just going to fall off a cliff. It's too good of a company, and the valuation isn't crazy for Amazon, so you know that your risk is limited here. So this would have been a good swing trade in my personal opinion. Now, right now, where is Amazon? We are approaching that resistance line. Now, I don't suggest shorting Amazon, but I do suggest keeping this on your radar and seeing if this consolidation continues, and if we have a drop back down to that $2,800, $2,900 level, and then you could initiate another swing trade in Amazon stock and ride it up to around $3,400, sell just before that resistance, so that you have a better chance of actually selling your position and locking in those gains. Now, another example, and this would be moving on up like the Jeffersons, is NEO stock. As you can see by this chart with NEO, we had an upward trend where the stock was trading in a well-defined channel, and that channel provided opportunities to make money in the stock. As you can see here, the stock has been trading up, down, up, down, up, down, up, down in a well-defined channel, and then it broke the channel, and then it broke the channel again to the upside, and now we are back to the original trend line. Now, NEO is an interesting stock. Right now the trend is a little bit broken, and we don't know what's going to happen, but before, when this happened, now 1, 2, 3, 4, 5, 6, 7, there were 7 opportunities to play this swing trade, half to the upside, half to the downside, and they provided great returns. So NEO stock is an example of a stock that's been trading in a well-defined channel, and that provided opportunities, and we took advantage of this opportunity. If you were part of the Patreon and the Discord, we talked about this swing trade, and we executed this swing trade. And then one example of a technical breakout, this is a cup and handle formation, again a stock that we called out, a trade that we executed, and this is on AMC stock. Now, if you look at this 4-hour chart, you can see that we definitely have a well-defined cup. We have 2 peaks right here at around $15, and this one was close to $16. And then, like a traditional cup and handle formation, we dropped off of the second peak, but we held this support here at around $12, and because that support held, we moved on higher. Now, this is your handle formation, and this is your breakout, and as you can see, if we take a look at the stock, we went from around $15, $16, the high of the second peak, to a high of $77. Now, that is not normal for a stock to move that much in such a short time, but this is a prime example of a cup and handle formation with a breakout to the upside, playing the macro trends here, the macro technical analysis I like to call it, then you had a possibility here to make good gains, and you could have sold out at $25, or you can continue to hold it. But as a swing trade, you always need to know when you are going to exit a stock before you get into it. And likely you got into this AMC trade at around $15, and you thought a good price would have been $30 based on where the stock was before, and you sold out at $30. Now hindsight is 2020, and you could have made a lot more money, but you gotta let your ego go, and you gotta stick to a trading plan, because planning is key in this game, in the stock market. And if you fine-tune your strategies and you plan it perfectly, the chances of you making money are going to increase, and then you can put yourself in a position where you are making trades left and right that are just bringing in that income, and that is how you are going to grow your portfolio. So that pretty much wraps it up for this video, mi gente. I just want to end the video with a quick quote, and that is, if you don't respect risk, eventually they'll carry you out. You need to leave your ego at the front door, and you need to stick to the game plan, because investing and trading in the stock market is not a get rich quick scheme. You need to fine tune your investing strategy, your trading strategy. You need to make it better each and every day. You need to stick to the game plan, and if you do that, you will be successful in the markets. But anyways, mi gente, that wraps up for this video. I thank you so much for your time. If you like this video and the content that I am providing, please consider hitting that subscribe button, ringing that bell, and most importantly, smash that like button. And if you want to join the community of investors, over 500 investors, where we talk stocks and cryptos every single day, you can do so by joining the Patreon, which will give you access to that super chat room, the Discord server. But you know the deal, mi gente. It's been real, it's been fun, it's been real fun, and this is We Are Investing, and together we are invincible. Dale!